Okay, welcome everybody to Wall Street Reporter's next Superstock CEO live chat. We're back with Valeo Pharma CEO Steve Saviuk for November 12th. Steve, welcome back.
Jack, it's been a while, but it's always nice to be back with you.
Steve, yeah, definitely it's been a while. You've been very busy. The stock is moving up today pretty significantly. You've had some great news. So we got a lot of actually new people in the audience. Every time you call on, we get new crowds of people. So, I think it would be good for everybody to know, like, if you can kind of explain, well, two things. One is, what is the business of Valeo Pharma? But just as importantly, kind of talk about a little bit about your background and your track record in this space, in this specialty pharma space.
Sure, it'd be my pleasure. So Valeo Pharma is a pharmaceutical company based in Montreal, Canada. Our current area of operation is the Canadian market, although as our press release indicated that we put out this morning, we launched our first U.S. product with a strong possibility that there'll be others coming in the coming months and years. And we're, when you look at pharmaceutical companies, people, it's a big catch-all in the sense that there are companies that develop drugs and companies that provide services. We're a traditional pharma company business model without the risk of the research and the development side. So typically what we're doing is we're in licensing. That means acquiring the rights for certain territories, Canada in particular, to innovative drugs that are created or developed by companies in the US, in Europe, maybe in Asia also, that for one reason or another don't have the infrastructure set up in Canada. So that's in a nutshell what Valeo does. Now, as you know, we've been around since 2003. We started at that time in licensing drugs from companies that you might recognize, like Merck and Schering-Plough and Sanofi, amongst others. And the same team that built that business starting in 2003, we sold that business in 2014-15 to Valeant, which is now Bosch Health, as you know. But we didn't sell the business, we sold our products. And then we've restarted. So many people call us Valeo 2.0. We've restarted in the sense of acquiring more or new or different innovative products to launch in Canada. So it's a bit of the same team that's done it before, had a successful exit, building something that's going to be, in our view, much bigger and with greater revenues and profitability.
Okay. I think one thing which I kind of like about kind of your business model, is kind of the specialty pharma model, is, we've seen companies, it's really about the execution, and, the model is relatively, maybe I'm simple, but the model seems to be like, rinse, wash, repeat, almost, it's very scalable. You pick up a new product. Obviously, the key is execution. I mean, these things are, you put them into the market and you just keep adding new products, growing the products, replacing them as they become, obsolete or whatever. And that's it. We've seen companies scale up that way. So, and that's the model for Valeo.
Again, it's very, you've hit the nail on the head, so to speak, in the sense that it is a very scalable model. And we're not, and the timelines are generally, when I say timelines from the time we acquire the rights to a drug to the actual introduction of the drug in Canada. And most of our drugs are considered prescription drugs. In other words, the doctor has to write a prescription for the patient to receive the drug. The timeline is relatively short compared to, let's say, a biotech company or a traditional pharma company that's starting to investigate new chemical for a specific indication, which could be 8-10 years before the product comes to market, and many, many hundreds of millions of dollars. So we've de-risked the model as much as we can. It's, as you say, it's all in the execution. So that's the registering of the product in Canada. The products still have to be registered with Health Canada. And then we have a great team in sales and marketing that it puts together programs to actually make physicians aware of the existence of the drug and the benefits of the drug. And afterwards, we have a strong regulatory team that supports things that people don't necessarily always think about, which is things like adverse events reporting and medical information. So we're a fully integrated company, and when I say integrated, what it means is really along the lines of the Pfizers and the Mercks, where all the services and all the capabilities are in-house. Versus using consultants or being more virtual in nature. So we're one of the few companies in Canada, in that sort of mid-tier group that has that business model. It's a big market, and we can handle a lot of products focusing on certain therapeutic areas. So the brain, the neurology, cancer, oncology, and then the hospital specialty market. So we don't want to be we don't play to all the audiences out there, all the therapeutic areas. It's focused, but within that focus, it's very replicable and very scalable, as you said.
Okay, so Steve, in the area that you're focused in now, let's talk about what are you doing in revenues right now, the current run rate, and what's the size of the opportunity in the three areas that you just mentioned?
Well, our current run rate, we just finished our fiscal year October 31st, and that the revenues will end up probably in the area of 8 to 8.5 million. Still being tabulated, but we exited. If you look at our last month, at about a $12 million run rate. So we had a very strong month of October, very strong fourth quarter. And that came about through organic growth, but also the addition of some new products that we launched during the course of the summer. Next year's projections, we're looking to double that 12 to 24 to 25 million. And really over the next 3 to 4 years, the objective is, 100 to 150 million dollars of revenue. Probably about 75% of that revenue projection is products that we currently have licensed rights to. So products that we will be launching in the course of 2021, I should say, and also products that are being filed with Health Canada, which will launch in 22 and potentially 23. Very exciting portfolio. We currently commercialize 9 products, and we will be adding 3 or 4 of those in the next year to grow our sales. So as you know, companies in the specialty pharma area trade on various multiples, whether multiples of EBITDA but one of the more consistent and often used the multiples is multiple on sales, and we see typically sales multiples ranging from 4 to 7. So you can imagine if we can drive our revenues into this 100+ million, 150 million, potentially higher range, and you apply those multiples. We expect that there's quite a bit of stock price appreciation that can occur over the course of the next months and years.
Okay. So wait, so basically, I'm doing some quick math. You mentioned that I don't know if my math got optimistic, but you said your goal is to do roughly scale up to about 150 million revenues in the next couple of years.
Yeah, I think that's within our sights, within our budgeting and our projection planning. It's always a function of what opportunities that we're working on will materialize that could drive that number higher. I mean, our intention is to become one of the key mid-tier players in Canada. You'll have the Novartises and the Mercks sort of in the at that, and Eli Lilly as an example. Pfizer as that top tier multinational companies, and then you fall to a sort of second tier, which are more regional companies. They're not in all the countries in the world. They're maybe in 2, 3, 4 countries. We're currently in Canada. It's certainly our intention is to look elsewhere also to grow as product opportunities present themselves. So yeah, I'd say the bottom end of that range is 100, and we're certainly looking for numbers that could go north of that.
Okay, so let's say based on the growth rate, right? So if you're growing at this at the same rate, I mean, you might get that 7x. I mean, who knows where the markets are going to be in a couple of years? But
Yeah.
you could get potentially a 7x revenues that would give you a billion plus market cap valuation. What's the right now? I know you recently did a financing. You raised what is it, 6 million? Was it 6 million? Right, you did.
Yeah, we raised 6.9 through Stifel in Canada. It was a bought deal. The green shoe was exercised. The overallotment was exercised. We're very pleased with that. So our balance sheet is very strong. We're not looking to raise any capital in the short to medium term. We have the funding to support the launch of our existing products. And what's nice about, when you called it, wash and
Rinse,
repeat.
wash, repeat. Rinse, wash, repeat.
Wash, repeat. A very interesting kind of
Maybe I mixed it up, but you know what I'm saying. It's the repetitive process.
Once you have your essential core commercial team, that team can handle more than one product. So you're just as you add products, your increase in variable costs is relatively limited, relatively small. Our infrastructure from warehousing internally, again, can handle a capacity, well above that $100 million mark that we talked about. So, and that's really kind of like the high water mark or a water mark that companies look at. If you become a $100+ million revenue company, you've reached that mid-tier, and other opportunities present themselves to you, and that's what we fully expect. So, it's as the old hockey analogy sort of says, it's not where we are today, it's where we'll be tomorrow. So it's not where the puck is today. Now it's where the puck's going. And I think you have to look and say, strong team that's done it before, experienced pharma execs, good growth over the last several years. While we put our pipeline into place. Pipeline is starting to mature when I say mature, by becoming coming out of the pipe and into sales and marketing. Great sales and marketing team, and we've done this before, and we've got I'm pretty excited about where we are today. And what lies ahead of us. We had, as I mentioned, good fourth quarter. I think first quarter is looking really good, and getting into those levels, that sales target level of the mid-20s by next year. And you never know where some of these products go. I think in terms of sales potential, they could certainly, some have the potential to exceed what our forecasts are.
Okay, Steve. So after the financing, how many shares? How many shares outstanding do you have approximately?
Currently, about 65 million shares outstanding. So at our current market price, where our market cap is about 65 million Canadian. So that's probably 50 million US. And we think very reasonable given our current revenues even. So if you look at 8 times 7, you're at 56. And just to expand on that multiple, why companies, some will be at 4 and some will be at 10, is a question of what's in your pipeline. So again, people are looking at not just what's your revenue stream currently, but what's it going to be in a year and in 2 years. And if it is going to accelerate quite quickly, they'll give you that higher multiple on your existing sales, because of the fact that these additional sales or that sales growth will be there.
Okay, so the takeaway is you get to that 150 million in a couple of years. I'm running through these numbers. The stock would be let's say almost 20x from where it is now. I guess subject to, you may have some additional capital raising that you have to do. Do you anticipate any kind of, do you have any kind of?
In the short to medium term, no. We do have a number of warrants that are outstanding, which we are being exercised on a almost continuous basis. So that does provide additional capital to us. But as I mentioned, in the short to medium, and when I say short to medium, certainly let's say the next 12 months, with our current product portfolio, we're not looking to go back to the market. We feel very strong with our existing cash and bank facilities, and with the cash flow. I mean, we're coming from a lower revenue ramp up phase, which was EBITDA negative. We expect to be EBITDA positive in the coming months, and certainly this year, and be a generator of cash versus having the need to use cash in our operations. So that bodes well for new products that we're looking to in-license, as well as for our need to really kind of pull back from any necessary financings.
Okay, so it sounds like you're basically at an inflection point right now. That's one of the things that we like. It's always the time when it makes sense to get into stocks which have that 10x upside potential. So let's talk about the pipeline, because I guess that's really what gets institutions and more serious investors excited. Like what's the future prospects for the company? So maybe we could start off actually with today's news. You're entering kind of the U.S. market. You got a new product going in Canada. I don't know if I could pronounce the name here. What is it? you got to make these things easy to pronounce.
So again, when I spoke earlier about having the three main focused areas, which are the brain and cancer and the hospital. Amikacin is an injectable. It's an antibiotic used in the hospital. So this is another product that is added to our growing hospital portfolio, and our hospital portfolio is starting to generate some interesting revenues, and we continue to see it as being a solid growth area for us. We also launched a product in the U.S., our first, which is again another hospital product. So it's used for certain patients who have an issue with water retention post surgery, and it's a relatively stable market. But what's key about it for us is first product into the U.S., so recognition of Valeo as moving some geography, so to speak. Secondly, a very complex FDA process, so it's a credit to our team to be able to handle that drug and the drug submission. And we are looking, as I mentioned, with other geographies.
Okay, so this is your first product in the U.S.
That's correct.
Okay, so which is, I think it's an important milestone, because I think the perception maybe in the market might be, okay, this company is in Canada, it's somewhere, in some foreign country, nobody's heard. I mean, a lot of Americans don't know where Canada is, so Canada is a massive opportunity for special, but now you're going into the U.S. market. It's a milestone. You're launching your first product. Can you talk about your U.S. strategy? Like what else?
I think for now, our U.S. strategy is very much on a product basis, so where there's an opportunity to acquire or develop the U.S. rights to certain products. So we're more than interested to start off through more of a partnering sort of relationship, and then potentially in the future having more of our own sort of boots on the ground. There's a second product that we'll launch in the U.S. is called Hesperco, which we've advanced our filing with the FDA for the U.S. approval of Hesperco. We've received the Canadian approval of Hesperco, and Hesperco is a very interesting natural product. It's called a flavonoid. It has some strong anti-inflammatory, strong immune support properties. We launched, as I mentioned, in Canada. It'll soon be in the major retailers in Canada. We expect to be in the U.S. Some point in the next 3 to 6 months, depending on the FDA submission and approval. And this is an example of a product that we have strong beliefs that it'll add significantly to our top line in the current year. As you know, we're going through a situation where the World Health Organization and just the world's health is being compromised with this pandemic, and a strong immune system is well recognized as a very important aspect of keeping us and getting us through this period of time. I think that as more data comes out about the product, which we expect to be able to clinically provide through clinical assessment, I think people will gravitate towards a relatively inexpensive $1-a-day product, which has a significant immune support and immune stimulation properties. So we're very excited about Hesperco, available online and soon online in Canada. Unfortunately, we don't ship to the U.S., but soon through U.S. retailers. But in Canada, it'll be available through the main retailers in Canada in the coming weeks.
Okay, I was talking to a guy in Vancouver. He's been taking it. He says
it has a long history. Obviously, all natural products have a long history of existence, but this specific product and the main ingredient in our product has been studied significantly by third parties that have published whether it be in vitro data or test tube data or in vivo data or data from animals or from humans, that strongly supports these immune properties or immune support properties that it has, and especially as it deals with coronavirus. The coronavirus has been around for a long time. The first main one, I guess, that people are aware of is SARS-CoV-1 or SARS. That was in 2002. Actually, the virus that's currently propagating around the world is called SARS-CoV-2. So you're looking at a very similar virus having different effects, maybe obviously stronger health issues associated with it. But essentially, there's a lot of the same building blocks, and the active ingredient in Sparco, through scientific literature, has been shown to have a dramatic effect on catching the virus, on the replication of the virus or reproduction of the virus, and on the immune or inflammation suppression, which the virus not in itself causes, but your body causes in fighting the virus. So these are very interesting, scientifically supported points that we think bode well for a very, as I mentioned, very inexpensive drug. It's not a drug; it's a natural product that can be taken. That we believe is very helpful in getting through any time where your immune system is compromised, or whether it's the particular virus we're dealing with, or just a common flu, which is in many cases is a form of coronavirus.
Okay, Steve, we're gonna jump into audience questions. I'm surprised we don't have any questions popping up on the screen yet. Usually we get like probably looks like about close to 200 people across online right now across all the channels. So let me just ask you a few questions. I'll finish my questions and maybe we'll get some audience questions. Right now you've been focused pretty much on in licensing, bringing in existing products, and then you put them into the regulatory approval, the whole thing you got to do. But have you or do you have plans to acquire existing products that are on the market, other specialty products, let's say, that might be on the market in the US? You can, because that's an active, marketplace.
I think the in-licensing, when I say in-licensing, which it means acquiring the rights to a certain product for Canada, there's various aspects. It could be a new drug, so that's not even on the U.S. market yet, is being filed with the FDA, or the approval is not yet received from the FDA or the European Medicines Agency. So that's one scenario. Sometimes there are existing drugs, and a good example of those would be two drugs we launched in the fourth quarter that actually contributed up to 20% of our fourth quarter sales. One is called Yandelus. So this is a cancer drug for a very rare form of cancer. It sells in the U.S., sells in Canada. Johnson & Johnson is the U.S. marketer of the drug in Canada. We are the Canadian marketer of it. Again, this is an existing drug. It's been around 5-6 years in the marketplace, and we were able to get the Canadian rights for it. Another is known as Amatop. This is a hospital product. It's what's known as anesthetic. So it's a product that is used prior to certain types of surgeries. So it's topical, helps with with numbing the skin prior to maybe a simple procedure or what have you. This was a Smith & Nephew product. So Smith & Nephew is, maybe we recognize, one of the top medical device companies in the world. And we have acquired the Canadian rights to that product. So that's an example of existing products. So those are essentially the two main buckets of products that we get or that we seek are innovative products that are being launched in other countries or will be soon launched in other countries, and sometimes existing products where they might have kind of become maybe smaller for some of the bigger companies, and they need a little no sales and marketing have been done on these products in the last several years. We can take them over, put them through our commercial activities, and actually grow those sales. So it's but the key is that the de-risking is not investing in research and development. We know where we're strong at. We're strong regulatory wise. We're strong commercially. those are the two areas that we want to focus on. So clinical development, which is a typical phase 1, phase 2, phase 3, where outcomes are uncertain. We follow it. Once the results are received, that's when we want to enter into discussions with a licensing partner. And we're in discussions with a number of U.S. listed specialty pharma companies. We're in a number of discussions with European companies, and neither of which have the infrastructure to set up in Canada. So we're a logical extension of them in terms of bringing these important drugs to the Canadian public.
Okay, we got some questions coming in now. Yazan is asking, what type of margins do you make on these drugs, and any issue with getting product placements?
Okay, well, the first part of that question is the margins run. The pharmaceutical industry is one where most of the cost comes in developing drugs, and then the actual manufacturing of drugs becomes relatively expensive. It's in many cases it's synthetic chemistry. So, on a scale, the absolute cost becomes quite low. So our margins will run in the area of 50 to 70%. Probably hitting that midpoint of 60 is where most of our, the average margin would come in. I'm not quite sure about that second question about product placement. If it relates, we're considered a traditional pharma company. So the model that we have is we visit physicians with a drug that has some unique properties, some benefits over an existing standard of care that that physician is seeing are being treated with. So for us, it's trying to demonstrate and illustrate to the physician the advantages of our drug over what might be an existing drug. In some cases, there's no drug for a specific case, and when we're talking Yandelus, which I mentioned earlier, we are selling in Canada. It's for a very rare form of cancer when there's really no other therapy that can be used once you've for the treatment of this particular type of cancer. It's not first line. So in other words, you've got this specific form of cancer. You'll be treated with maybe a traditional drug. You fail that treatment. You go to a secondary drug, fail that treatment, then you'll come to our drug. So we're dealing with a relatively small subset, and the results have been good. It's not total remission. We're talking extending life, quality of life. So again, very unique, scientifically challenging drugs that so our sales team have a lot of depth of pharma knowledge, and we pride ourselves on being a very good partner in Canada for accessing physicians and getting the so-called message across about the benefits of a drug.
Okay, we got Alex asking a couple questions. What medication in your portfolio is the top revenue generator for you?
Currently, it's changing rapidly, and certainly, if you ask me this question in 6 months or 9 months from now, the answer will be different. But currently, our top-selling drug is morphine. It's a morphine tablet. So it's more in the hospital market for pain management. So again, we segment most of our products, not all. I mean, you're going to have some products like Hesperco is a bit of an outlier. It's not a hospital product. It's not a neurological product. It's not an oncological product. But it's still part of within our capabilities. But morphine, it plays a big role in the hospital, both in the hospital and then when patients leave the hospital for pain management. As right now, our biggest selling drug.
Okay. He's also asking, do you have any medications targeting diabetes management?
Unfortunately not. It's not one of our, there's many therapeutic areas that a company can address. You have to just pick, you have to be master of all of them. So we've selected the 3 that we've selected for many reasons. Sometimes it's the number of physicians. Sometimes it's the number of the drugs that we have access to, or we can actually in-license. And these 3 areas, we're building more and more expertise in them, which it's like when you talked about wash and rinse and repeat, it's a self-fulfilling prophecy. As you develop a knowledge base in, let's say, neurology, the companies that have drugs that are interesting for neurology or for various brain ailments are more likely to come to you because you've developed kind of the de facto expertise in this area. You know the doctors, the key doctors that are around. You've got knowledge of the actual science, and have the sales reps that are dedicated to calling on these physicians and getting and informing them about the benefits of these drugs. So it's important to focus. Unfortunately, it's a long answer to say no, we're not in diabetes.
Okay, so Gerald is asking, I guess, he understands that you're going into the US market. Do you have any European exposure, or maybe he's asking, do you have plans for entering the European market?
Our European exposure right now is more inbound. In other words, we have a number of partnerships with European companies. I can give you a couple examples of Zambon in Italy, which is the manufacturer and the developer of our Parkinson's drug that we launched just over a year ago. So it's mostly products coming from Europe into Canada. Do we think that can change over time? It's not going to change this year, but it's certainly over the course of the next couple of years. We have some ideas and interest in taking this Canadian-centric company and giving it a bit more regional expansion. That's definitely something that we are willing and wanting to pursue.
I mean, but the Canadian market is still a massive market. I mean, it's multi-billions of dollars.
The Canadian pharma market is about a $30 billion market. So again, even taking a small percentage of that market, we can become a very sizable company. It would be more opportunities to take necessarily, let's say, the rights to a drug and get rights not just in Canada, but in other jurisdictions also, that could pull us into some of these other jurisdictions.
Okay, we got a question. How do you plan on marketing Sparco once it's available through retailers and Amazon?
Amazon is actually, we've shipped to Amazon, and I checked earlier today, and it's not on the site yet, but we expect it to be on the site in the coming days, so you'll be able to buy it on Amazon Canada. We have active discussions with all large, sort of pharmaceutical retailers in Canada. And we're just working out the details in terms of shipping product to them and supporting them with what I think will be a pretty extensive marketing program. There'll be a lot of awareness about the drug, but it's not. So I keep calling it a drug. It has drug-like qualities, but it's a natural product. So it's not. I don't want to get in trouble or get anyone in trouble by calling it a drug. It has a lot of interesting science behind it, as I mentioned. And I would kind of, there's things I can't say today about it that I might be able to say in 3 or 4 days, but all I can say is this product is not only going to be clinically supported, which is going to be, I think, very interesting. We believe that it needs some exposure and actual science, additional science which we're willing to support. But as far as retailers are concerned, all the main ones from Shoppers to Jean Coutu, London Drugs, what have you, they should have the product in the coming weeks. And as I mentioned, it's about $1 a day, so relatively inexpensive. And I think at this time of the year, regardless of the various viruses that are going around, it's a very interesting product to take to help, again, your immune system. I know we had one customer friend of ours called and said, he's been taking the product, thought he had felt the cold coming on, then those symptoms passed over. It's very anecdotal, but I mean, I'm getting that type of comments back from people. But I think it's a very, during the fall and over the winter, our immune system is attacked because the cold, we get tired. The days are shorter, less sunshine. I think taking Sparco should be a part of anyone's regime for trying to stay healthy over the coming months.
Okay, so Steve, we're probably going to have you back maybe in a week or two, where maybe you could do like a full presentation with the slides, which would show the pipeline and what do you have coming up, because I think that's key, and I think it'll be easier for investors to kind of visualize the whole pipe, because that's that would be important if they can visualize the whole pipeline. But if we could kind of let's see if we can wrap up on two questions. One is what kind of news flow can we expect from Valeo? What kind of milestones do you have coming up over the next let's call it a couple months, like 2-3 months?
I think we closed our financing in September, and essentially news flow sort of, I would say, dried up or has been sparse since. I think yesterday's release, or this morning's release, sorry, is the beginning of what we think is going to be quite an active period of information that we need to share with the market from a regulatory perspective, and that we want to share with the market from a knowledge and an appreciation perspective. So it should be quite active over the next, at least as far as I see, the next quarter, let's say. During that quarter, Sparco is going to be a big part of the news, and the launch of Sparco and some of the other scientific data we may be able to share with Sparco. There's a couple other product announcements we hope to make in terms of approvals and then ultimately launches. We do have 2 products that are being ready for first half of next year launch. That have been approved by Health Canada. So it's a busy time at our place in terms of coordinating the commercial activities, and also looking at the in-licensing activities where we're working on a number of different on a different fronts. So as I said, it's Valeo today. I think our financial statements look best they've looked in the last 5 years since the sale to Aventis, and looking at that pipeline and saying where can Valeo be in 2-3 years, and it's a lot of it is the products, as I mentioned, we have, and what could be even supplemental to that is some of the products that we are in discussions with to in-license. So we have the objective to becoming that mid-tier company, coming to $100 million plus revenue company, and really being a force in bringing innovative medicines to Canadians, and also to look at some geographic expansion, whether that be in the U.S., Europe, or both, is certainly in the planning stages, and as our first launch in the U.S. demonstrated, more than just planning stages, in the execution stages. We're really excited about this first new product is selling. And now Sparco, we are in discussions with a couple of retailers in the U.S., specialty retailers, about the product, and I think it's it bodes well for the future of Valeo Pharma.
Okay, Steve. Okay, so let's kind of wrap up. A final note. A favorite question we always ask here is, in your opinion, top 3 reasons for investors to consider Valeo Pharma today.
I would say business model. In licensing business model means revenues quicker rather than development model. Second, I think valuation. Valuation is very conservative to where our sales are today, but certainly where our sales are going to be this year and in the coming years. And the team that's done it before. I mean, we've been at this for over 20 years. We had a successful exit, and I'm not suggesting we're going to be exiting again this time. That was sort of something that came out of left field when Valiant approached us and offered to buy our company. They did so on 2 separate occasions, and finally we decided to sell our assets because we were moving in these new therapeutic areas. We were more of a dermatology hospital product company before, and now we've moved into the other areas that I've mentioned. So strong team, attractive share price, good business model, full pipeline, revenue growth. I mean, these are all the boxes I think that an investor wants to tick, and certainly the ones we keep our eye on in terms of like what are the drivers that'll make our company successful. One thing that I have not mentioned and is very important is every individual working for our company is a shareholder. We currently, management and the board still owns between 65 and 70% of the shares. We've got a lot of our own wealth or money invested in the company. So we feel we're very much aligned with our investee shareholders that, our objective is to build revenue and a profitable and valuable pharma company, and the share price will take care of itself. And I think that's what your viewers want to see, that also is, that we're aligned. We're not working for salaries. We're working to build share price, because that's where our sort of end point is, if you will, our real objective. And I think your clients or your viewers have the same objective to get into a share when it's a company when it's more in its infancy, and then take advantage of all the hard years of work that's been put in, and hopefully exit at a much higher price.
That's the whole idea. So I'm glad, Steve, I'm glad you realize what the audience is looking for. Yeah, they're looking to get in, at $1 and get out at 10. Hopefully, hopefully as soon as possible. I mean, no offense. I mean, they could do it, in 3 months. That'd be great.
Timing is always is more of a art than a science, I suppose. But the thing, if you take care of the little things like building a pipeline, building revenue, increasing profitability, I think those get reflected in the share price.
It's important because it's essentially you have a system. It's a system in place. It's not like you're expecting it's really you have like a very methodical way of building this. The
criteria for drug selection is not haphazard at all. And as much as we have 9 products with a pipeline of about another 7 or 8, I think, in development currently, that means we've looked at maybe 200 plus drugs, and for many reasons turned them down. And there's obviously many reasons why we don't think that they're a good fit for us. One of them could be that they're just not in one of the therapeutic areas that we want to focus on. So they're better suited for another company that's got to focus on those areas. Cardiology might be an example that we can use. So it's, you stick to what you do best. And that's where that's what our motto is and what our focus is.
Fantastic. Okay, Steve, thank you very much. Thank you, everybody, for joining us today. And we'll see you all on the next live stream.
Great. Thank you. Bye.